Welcome to Truth Behind History. The stories are real, the impact is lasting. Today we're diving into the unlikely birth of a republic that changed the world, not with kings or conquests, but with merchants, maps, and markets. The Dutch Republic didn't just emerge out of nowhere. It rose from rebellion, chaos, and a bold rejection of centralized power. Let me ask you, what happens when people say no to an empire, but also say no to replacing it with another one? Let's find out. The story begins in the shadow of the Spanish Empire. For 80 years, from 1568 to 1648, the Dutch provinces resisted imperial rule in a slow-burning revolution known as the 80 Years' War. But this wasn't your typical top-down revolt. It wasn't led by a single general or future king. It was messy, local, decentralized. Think villages banding together, merchants funding militias, and city-states choosing autonomy over imperial obedience. This resistance wasn't just about borders. It was about the principle of local agency. Now, why did this take root in the Netherlands of all places? Well, culture mattered. The Protestant Reformation had already carved a deep divide between Catholic Spain and the newly Protestant Dutch. But it wasn't just theology, it was economics. Protestant values emphasized personal responsibility, thrift, and work ethic. Combine that with a thriving merchant class and cities used to managing their own affairs, and you get the cultural soil ripe for a political transformation. So, when independence came, the Dutch didn't build a monarchy to replace Spanish rule. Instead, they did something radical for their time. They formed a republic. But not a unified republic like modern nation-states. This was a federation of provinces, loosely tied together, without a central ruler or a national bank. Power stayed local, decisions were made cooperatively, and experimentation was the norm. No king, no crown, just cities and citizens figuring it out. And here's the kicker, this wasn't happening in isolation. As feudalism was fading across Europe and global trade was booming, the Dutch positioned themselves at the heart of a new economic world. Their decentralized structure let them move fast, adapt, and take risks that more centralized empires couldn't. So, as chaos swept Europe, the Dutch built a republic on commerce, cooperation, and calculated defiance. But what happened next? How did this patchwork of provinces build the first multinational corporation and change capitalism forever? Stay with me. If the Dutch Republic was the rebel experiment, then the VOC, the Dutch East India Company, was its most daring invention. In 1602, this little republic pulled off a world first. It created a publicly traded company. Ordinary citizens, merchants, bakers, even shipbuilders, could now invest in global trade. Not with royal permission, not through taxes, but by buying shares. This was equity-based innovation, and it was revolutionary. The Dutch East India Company didn't raise money by begging a king or borrowing from a crown. Instead, it invited the public to take a stake in risky voyages to Asia, ventures that promised huge profits if they survived. And here's the clever part, investors didn't have to wait for ships to return. The company's shares could be traded in secondary markets, giving birth to something we now take for granted, capital markets. Let that sink in. People in 17th century Amsterdam could sell shares in a company before the cargo even touched land. That's not just clever finance. That's the birth of liquidity, of speculation, of modern investing. But the VOC was no mom-and-pop shop. It was given a state-sanctioned monopoly over Asian trade routes. It could wage war, build forts, negotiate treaties. It had the teeth of a government, but it wasn't run by one. Governance remained in the hands of private directors and shareholders. This was not a government agency. It was a private company with public power. Now ask yourself, was this genius or dangerous? On one hand, it diffused risk. Investors shared the costs and profits. No single merchant had to bet the farm. It was voluntary risk financing. People chose to invest, hoping for rewards. And it aligned incentives. Ship captains, traders, and shareholders were all pulling in the same direction. But on the other hand, it created something the world had never seen before, a corporation with the legal clout of a state and the capital of a small nation. And once that genie was out of the bottle, there was no putting it back in. So, was the VOC a bold engine of free enterprise, or the first sign of capitalism's dark side? That depends on what came next. So, you've got a revolutionary company with shares being bought and sold. Now what? Well, the Dutch didn't just invent the modern corporation. They also gave it a place to live and breathe. In the very same year the VOC launched, 1602, Amsterdam founded the world's first institutional stock exchange. Let's pause there. Before Wall Street, before London, before any modern financial district, there was Amsterdam. This wasn't just a marketplace, it was a laboratory of financial innovation. The exchange allowed people to place bids and asks on VOC shares. They could speculate, hedge, hold, or sell. In other words, they created the foundational mechanics of today's financial system, not by design, but through daily practice. It was messy, experimental, and sometimes chaotic, But it worked. And here's the part that really set it apart. It wasn't reserved for kings or aristocrats. Regular people got involved. Non-elites participated by gathering in coffee houses, inns, and public courtyards. These weren't hedge fund offices. They were everyday places where reputation and word of mouth mattered as much as contracts. This wasn't a market controlled by the state. It was an emergent order, self-regulating, trust-based, and organic. There were no central regulators, no compliance departments. Yet the market functioned. People showed up. Trades happened. Prices moved. So how did this system avoid descending into fraud or chaos? Simple. Social norms and trust did the heavy lifting. Reputation mattered. If you cheated someone, the whole marketplace would know, and you'd be shut out. That's how order emerged, not from edicts, but from behavior. Now think about that. A stock exchange without a central bank, without a securities commission, and yet it became the beating heart of a global economy. Could something like that work today? Well, maybe that's the wrong question. Maybe the better one is, why did it work back then? Tulip mania, the go-to example of economic insanity. You've probably heard the story. In the 1630s, the Dutch went absolutely bonkers over tulips. Prices skyrocketed. Fortunes were made. Then, boom, the market crashed, and everyone lost their minds and their money. But hold on a second. What if I told you, the real story is way more nuanced? Let's dig into the petals of this so-called bubble. First off, most of the famous tulip transactions, they weren't actual purchases. They were forward contracts, non-binding agreements to buy in the future. That means a lot of those outrageous prices were more like quotes at a party than cash at a register. People were speculating, sure, but the financial exposure was limited. It's like agreeing to maybe buy Bitcoin 6 months from now at today's price, but not putting any money down. And the idea that the entire Dutch economy collapsed? Total myth. In reality, only a small, niche group got involved. The mania was limited to certain circles, mostly among wealthy hobbyists, florists, and well-connected merchants. The broader economy barely flinched. So where did the legend come from? A lot of the hysteria came after the fact. Later writers, especially moralists, used tulips as cautionary tales. They exaggerated the story to scold future generations about greed, vanity, and foolishness. You know the drill. Look what happens when people chase easy money. Sound familiar? But here's what's most interesting. Even after the tulip market cooled off, the institutions around it didn't collapse. The stock exchange kept running. The VOC kept trading. Dutch commerce rolled on. The mechanisms were resilient. In fact, the system evolved, learned, and adapted. So was tulip mania an irrational bubble? Or was it a rational market responding to new assets in a world still figuring out how finance worked? Maybe it's not about the flowers at all. Maybe it's about how easy it is to misunderstand a system when you're only looking at the headlines. Now, the Dutch didn't stumble into capitalism by accident. It wasn't just tulips and trade routes. It was culture. It was structure. It was values. Let's start with religion, not to preach, but to understand. The Netherlands was steeped in Calvinism, a branch of Protestantism that emphasized hard work, thrift, and personal responsibility. These weren't just Sunday sermons, they were economic behaviors. The Calvinist ethic encouraged saving, reinvesting, and resisting lavish excess. You might call it the spiritual side of capitalism. But here's the twist. This same society was also one of the most tolerant in Europe. Jews, Protestants, even some Catholics, many fled persecution elsewhere and found refuge in the Dutch Republic. Why? Because here, diversity wasn't a threat. It was a competitive advantage. More tolerance meant more talent. And when you welcome human capital from all over the world, your economy doesn't just grow, it evolves. Think of it as the free flow of genius. And politically, the Dutch weren't building a centralized empire. Quite the opposite. They had city-states, independent, competing hubs that made their own decisions, levied their own taxes, and crafted their own trade policies. These cities weren't bogged down by a distant king or a bloated bureaucracy. They were agile, innovative, and incentivized to outperform one another. Competition wasn't crushed. It was embraced. Taxes were low. Interference was minimal. Entrepreneurs could experiment without asking permission. It was bottom-up economics, and that freedom translated into ships, markets, art, science, and yes, profits. Now compare that to most of Europe at the time, where kings micromanaged commerce, church and state were inseparable, and innovation was often punished rather than rewarded. The Dutch model was different. Not perfect, but radically different. And it raises a question we should all think about. What kind of society builds systems that reward voluntary cooperation, innovation, and risk-taking without crushing them under the weight of control? The Dutch had an answer. So, what happens when a decentralized republic leads the world in trade, finance, and freedom? Eventually, it starts to centralize. At the height of its golden age, the Dutch Republic was the envy of Europe, wealthy, tolerant, and globally dominant. But success, as it turns out, has a side effect. It attracts power, and once power starts concentrating, the game changes. Over time, the very forces that made the Dutch model work, local control, minimal interference, distributed innovation, began to erode. The government grew larger, military ambitions expanded, bureaucracies thickened, and slowly, the republic became more like the empires it had once resisted. You see, when states become rich, they often try to become powerful, and power requires armies, navies, taxes, central control. That shift didn't happen overnight, but it was noticeable. Provinces started losing autonomy. Decision-making got slower, more political. The dynamism that once defined Dutch capitalism began to dull. Meanwhile, a new player was watching and learning: England. Britain took the best parts of the Dutch system, equity markets, trade routes, joint stock companies, and merged them with a more centralized state apparatus. The Bank of England was founded in 1694, a move that gave the British government access to long-term financing and tighter control over the money supply. With that, London began to eclipse Amsterdam as the financial capital of Europe. Now, here's the irony. The decentralized system that gave the Dutch an edge ended up being absorbed into more centralized empires. The very model that challenged top-down authority got folded back into it. And history repeated its rhythm. First come the innovators, then come the imitators, and finally, the consolidators. So what's the lesson? Maybe it's this: success often plants the seeds of its own undoing. When freedom works, there's always pressure to manage it, to direct it, to control it. But control comes at a cost. The question is, who pays? So, what does the story of the Dutch Republic really tell us? It tells us that you don't need a king to build a world power. You don't need a central bank to launch global finance. And you don't need top-down planning to create a society that works. In fact, for a time, the Dutch model thrived because of what it didn't have. No monarch issuing decrees, no bureaucracy choking innovation, no centralized state absorbing all risk and reward. Instead, it had norms, shared cultural values that supported trust, trade, and cooperation. It had systems built from the bottom up, messy, imperfect, and incredibly effective. But here's the haunting part. Over time, those decentralized foundations were quietly replaced. Not all at once, but piece by piece. More rules, more taxes, more control. And slowly, the engines of creativity and experimentation started to sputter. That arc, from bottom-up brilliance to top-down stagnation, isn't just a Dutch story. It's a pattern, and it raises a hard question. Are we repeating it? Are we drifting from the very principles that allowed markets, science, and society to flourish in the first place? Maybe history isn't just about names and dates. Maybe it's a mirror. And maybe the Dutch Republic is one worth looking into, especially now. Thanks for watching Truth Behind History. If you enjoyed this deep dive into one of history's most quietly radical republics, make sure to like, comment, and subscribe. And if you want to explore stories like this even deeper, check out my book History They Tried to Erase. The link is in the description. For more surprising, thoughtful, and entertaining takes on the past, explore the other videos on this channel. History isn't over. It's just beginning to make sense.